Hi everyone, Darren Kresovic, Mortgage Loan Officer. Today's topic is the payment ratio. So when I talk with a client, we run through their qualifications. One of the things we as a lender look at is a house payment ratio. Let's say for conversation purpose and ease of math, I have a husband and wife, both gainfully employed. Their household monthly gross income is $10,000. The maximum payment, including taxes and insurance, mortgage insurance, and any condo or HOA dues, we generally want to see stay around 30% of that gross monthly income, or $3,000. Now that's a gauge or a guide for us as a lender. There's other factors that we take into consideration. Oftentimes clients ask me, Darren, does that payment seem reasonable for us? And I try to point out to each client that that's a very personal decision based on not only their short-term or their house purchase goals, but their long-term life goals. Well, what are long-term life goals? Well, what are your plans after you acquire the house, after you buy? A few things that I like to point out. Maybe a client wants to buy a second home or a vacation home. Maybe they want to buy investment property. Maybe a client wants to start a family as soon as they move in, and they're willing to stretch a little bit on that payment. Maybe they're willing to go to $3,200 a month, make sure that they have a big enough house to accommodate their growing family. Maybe the couple likes to take more vacations and would rather have a much smaller house payment so they could take more vacations and feel comfortable doing so. Those are life goals to consider. And those are things that I know when speaking with other clients, they were very thankful and appreciative to think about as they plan for their home purchase. Give me a call if you have any questions, and I appreciate you listening.